we're going to watch this video together. Everything is crashing. When will it bottom? I don't know. Let's let Joe Brown tell us.
We're going to cover 3 things here. Number 1, it's about missed expectations.
That I pulled this in on while I was driving around, and I heard him talk about expectations, and I was like, stop where I'm at right here. We're going to make sure we watch this together. Now, why? Joe, why would I even mention, why would that have picked my ears right there?
Well, it's a bit like saying that your stock's going to hit a particular price, right? Telling it what to do is not effective. You can't do that. You just have to follow the trend.
That's right. Yeah. And whenever you're looking to trade, whatever that trade is, if you trade with Outlier or not, doesn't matter to me. In fact, this exact PowerPoint is linked down below. This is the exact plan I'm using in the US Investing Championship this year. You click it, you got it. There's no malarkey to go with it. The number one thing that we talk about is there are no expectations on the outcome of any trade, except for SGov. I know SGov is going to go back up. Trust me, bro. SGov only goes up, bro. SGov only goes up. I bought the bottom of it right there. But going back to that, if you're not in SGov, anything besides SGov, you shouldn't have any expectations for the outcome of the trade. What does that mean? Whenever you're looking to trade, you want your losers to be cut, right? So we have an expectation of how much we're willing to lose. But we want our winners to run out of control. And because we want our winners to run out of control, why would you set any sort of expectation on that, right? I see people who have like a 2-to-1 risk to return, right? I'll risk 1 to make 2. Okay, imagine you risk 1 to make 2, and then it goes to make 17 without you because you had your expectation. I wanted to make 2. Dude, you could have missed out on generational wealth on a single trade because you had the expectation of, I'm going to get out when it hits my profit target. Setting profit targets in 2 different ways works against you. Number one, by setting a profit target up here, you're anchoring. Let's go to SoFi. Sorry, I have to do it. You're anchoring to this point. Let's say your profit target on SoFi is $25. Okay, you're anchoring to that point. When you anchor yourself to any outcome which you cannot control, but what do you mean I can't control it? You can't control jack. The only things you can control in the market are where you get in, where you get out, and at what size you get in with. That's it. There's nothing else you can control. Now, let's say that you set your target right here. You're anchoring to that point. And if SoFi never comes back to $25, which is a possibility, listen, I know it's the future of finance. One day it'll get there and it'll be $75 and it'll be in the S&P 500 and I'll have all the egg on my face. But before that point, how long are you willing to hold this to get to that $25 level? Right? In fact, let's use SoFi as an example. How about right here? In January 2025, receipts are on YouTube. I was saying, do not buy this as it was crashing up into this order block right here. Imagine this was your price target, right? You have been holding it down here from $7. And once it got to 18, you were going to sell, right? So cool. And it absolutely did. But you know what else happened? All of these people who created that order block back in 2021 said, when it gets back to $18, I'm going to sell. So these people waited 4 years to get their money back. They waited 4 years to get their money back. And once it finally happened, they sold out as fast as they can. So if you anchor to a point, are you ready to wait 4 years to get to there? I'm not. I don't know about you, Joe. I'm certainly not.
So much can happen in those 4 years. And I don't want to go through the emotional roller coaster it takes to wait that long and to watch this thing.
Exactly. So you're weighing yourself down. You're setting yourself here, right? And if it does ever come to this point, this is the second point here. Are you actually going to sell? Right?
Well, that's the question.
I bet you you're not. Joe, right. I'm going to argue right over the top of you because I know you're not.
Are you going to follow?
Argue with me? No, you're not, Joe. No, you're not.
But I'm going to follow my plan, Chris.
Once it gets here, what are you going to do? You're going to be greedy AF. So of course you're not going to sell.
Right.
And then it's going to come right back down. You're going to be like, son of a bee, if only I had sold it. I'm telling you, this, you set yourself up with all the problems by setting an expectation. So we've diverted. We've gone 36 seconds. Come on.
Number 2, data over drama. And number 3, when in doubt, zoom out. I'm going to show you what happens when we actually do get lost decades in the stock market and how to handle that. So number 1, missed expectations. This is very important right now. Most people are unaware of the expectations that they have, but it's important because missed expectations
Brandon is ridiculous. He is on a roll today. Itty bitty baby Jesus owns SoFi, allegedly.
Can cause you to doubt what you know. This is applicable in life, but especially in markets when they're falling off of the edge of a cliff like they are right now. But when you take a look at the stock market and you see the overall stock market plummeting and falling off a cliff, when you see treasuries taking a nosedive, when you see high quality stocks, they're just falling, it can cause you to second guess the things that you know are
Hold on. Please pay attention to this part.
Actually true. And the reason why you're wondering, hey, is this the end of the stock market? Did all of these companies that I invested in, and I did the work, I did the fundamental analysis, I did the technical analysis, I know these are quality companies, I know what they're going to be making, or I have a really good idea of what kind of earnings they're going to be making in the future. Was I wrong about all this? Should I just cut my losses here and run? Should I go all to cash? Should I head for the hills?
You ready? Let's go back to that real quick, because I honestly think it's really good. Y'all pay attention.
And they're just falling. It can cause you to second guess the things that you know are actually true. And the reason why you're wondering, hey, is this the end of the stock market? Did all of these companies that I invested in, and I did the work, I
did the work,
did the fundamental analysis, I did
the fundamental analysis,
the technical analysis, I know these are quality companies, I know what they're
I did the technical analysis, and I know these are quality companies
going to be making, or I have a really good idea of what kind of earnings they're going to be making.
I know what they're going to be making, or if I don't, I have a good idea of how much they're going to be making
in the future. Was I wrong about all this? Should I just cut my losses?
Was I wrong about all this? That right there, my friends, is exactly why you have to have a plan and let the market tell you what it's doing. If you have done the work, you've done the fundamentals, you know what the sales and all that crap's going to be in the future, and the price does not reflect what your analysis is, what do you think is more important? Your analysis? You saying, this is a quality stock, I know how great it is? You saying, oh, it has to go back up because of my reasons? You saying there's no possible justification for the price to go down? What is more important? Your analysis or the price?
I'm going with price, Chris. The only way you're going to make money is if the price goes up.
You're 100% right. The only way you get paid, and I get paid, the only way you put money in your bank account that wasn't in it yesterday is if the price, assuming you bought it and not going short, is if the price of the asset that you bought is going up. Period. Full stop. It's not up for debate. I don't need a YouTube disclaimer. If the price is going up, you're getting paid. If the price is going down, no amount of fundamentals, no amount of justification, no amount of whatever, how great of a story it is, and I know what the earnings will be in the future, et cetera, et cetera. None of that matters. Bro, I'm so passionate about this topic. None of that matters. You will not get paid. In fact, what will happen is you'll have negative dollars in your account versus yesterday. This is the emotional trap that people fall into, Joe. I feel like a preacher on Sunday. This is the emotional trap that people fall into. You don't have to do that. From this moment forward, you never have to do this ever again, ever. Will you have losing trades? Yes, because that is a consequence of trading. Will you have winning trades? Yes, because that is a consequence of trading. But you get to decide. You get to decide how big of a loss you take, and you get to decide just how big you let that winner run when you get the opportunity to do so. So when I heard that, Joe, I stopped in my tracks. I pulled in the garage, and I'm like, you have got to be kidding. This is exactly the mindset of the type of people who can't make money in the market. They can't make money in the market. And I'm not saying that Joe did that. Joe Brown, not you, Joe. I'm not saying that he did this. I'm saying that is the mentality that you must break if you want to be successful. Period. Full stop. There is no way you can argue against this. But I don't care. The market doesn't care. You're not going to make any money unless the price is going up.
It's a common message across all of the USIC champions that we have interviewed. They have all said you have to stay out of your own way. You have to let the emotions stay at the door and trade your plan. You got to trade your signals. Otherwise, you're just going to be part of the 90-90-90 that don't make it.
Right. And Joe, there are so many stocks out there, thousands and thousands of stocks out there. But that doesn't mean that you should buy any of them at certain times. In fact, I would venture to say that all stocks are bad. I actually heard the echo of that coming through back from the speakers on your side. All stocks are bad, but every once in a while, they act right. Your job as a successful investor is to identify when they are acting right and when they're not. The best way to do that is to subscribe to this channel. How's that sound, Joe? Boom, how you like that? We're so close to 50,000 subscribers. Help me get there. Help me get there. Let's keep going.
This is here and run. If I go all to cash, should I head for the hills? The main reason why.
Hey, Rob says, this is one of the best lessons I've learned here. It cost him 82 cents a day, but likely saved him thousands. Skinny Buff Guy says, saw something recently that Stanley Druckenmiller used to throw up twice a week when he started trading. New alter ego, Preacher Yule. Oh, I don't know. That may not be a bad idea. Nobody likes the Market Wizard, so maybe Preacher Yule will take over instead.
I like the Market Wizard.
You have
you are in the far minority, Joe. I don't like the market. I literally gagged on the Market Wizard beard on Monday. That was fun.
Oh no.
Expectations that maybe you didn't realize you had that are not being met right now about what the market is supposed to do. If you take a look at.
What did he just say? What did he just say to me?
About all this, should I just cut my losses here and run? If I go all to cash, should I head for the hills? The main reason why those thoughts are popping up in your head is because you have expectations that maybe you didn't realize you had.
Which is true.
That are not being met right now about what the market is supposed to do. But if you take.
Exactly. Okay. I'm glad I rewinded that. When you set that expectation and your expectation is not getting hit, how are you going to feel? Probably pretty bummed out. That's why when you start a trade, don't have any expectations. That's it.
Nobody wants to be wrong. Being wrong sucks.
Being wrong super sucks. Yeah.
Shows you the average drawdowns and the average good years that happen in the stock market. And you can see these little diamonds and red bars represent the maximum pullbacks that happen from year to year. And then you'll notice this black line drawn all the way across is at negative 14%. The average pullback in the market that happens from one year to the next is 14% from top to bottom. It feels.
That's really interesting. That's super interesting. The average pullback is 14%. That's way bigger than I expected, truly. Wait, let's think about that. If the average annual return, here we go, is, oh, wow, look at this, Joe. This is actually what I was just thinking about. If the average annual return is 10.7% and the average pullback at some point during the year is 14.1%, that's a 24 percentage point spread. That's actually pretty crazy. Who would have thought that the average return is 40% less than what the average, I'm rounding, 40% less than the average pullback? That's kind of nuts.
Yeah, that is interesting. I wouldn't have guessed that it was 14% down.
Me either. Huh. That was a great slide that I tactically acquired. Thank you very much.
Like the world might be ending right now, but the market is down 10% from its top to its current low. So the expectation that your investments or the market overall would go up a lot, are not being met. And that can cause you to doubt what you know, which is, hey, I invested in really high quality companies. I know what the market.
He's going to say dollar cost average. I know he is.
Market does over the long term. Should I be dollar cost averaging or buying?
You some bitch. I told you. I told you. Yeah. And there's nothing wrong with dollar cost averaging as long as you're dollar cost averaging on the way up and not on the way down. Okay. Absolutely nothing wrong with that. But here's the thing. because so many people think that you got to buy the dip, bro, dollar cost average on the way down. Let's remove 6 drawings and let's talk about this real quick, right? If you bought it here, because there's no way it can go lower. I'm a dollar cost average into it here, and here, right? Thinking, oh, I'm going to have such a great, come on, Clicky. I'm going to have such a great price when it goes back up, right? Joe, the crazy part about this is if you bought it on the way back up at those exact prices, your average price would be 100% identical down to the penny, because that's just how math works.
Yep. And that's not something you think about. That's not how we're trained socially, right? We're always looking for the sale price. That's not what you're looking for when you're trading stocks.
Yeah, absolutely. And for those of you who are watching new, seeing this, it probably just blew your mind. But if you buy at that average, if you buy the same number of shares going down as you would going up at these exact same prices, it's the same average cost. You're not dollar cost averaging to benefit yourself at all. In fact, what you're doing is adding to losers, making things worse and worse and worse when you really don't have to. In fact, if you're adding to losers, I got bad news for you. You know where this is going. I didn't say it. Paul Tudor Jones said it. If losers average losers, type in the chat, what do you think winners do? Shut the front door. It's the same as dollar cost averaging? Huh. Who would have thought? Isn't it weird how math works? Isn't it weird that it takes some random guy on the internet to like poke you in the eye and be like, hey, stop doing that, stupid. And you're like, oh, yeah, maybe he's onto something.
Then you have to take the time to let that sink in, though. Because again, we are taught to look for sale prices everywhere except the stock market, right? So it's very hard to shift your mind and engage on the way up is where you want to be buying.
Remember, that's the difference between assets and consumables, right? I got a new DuckTales mug. You know, Rick Warfish had a mug similar to this, and I thought that he had this same mug. So Rick was one of our Bravo students. He's here right now, by the way. And I bought this on eBay. I love eBay. eBay is like thrifting for Chris. I have so much fun on eBay. I buy so many Rolex parts on eBay. It's obnoxious, but I have so much fun on eBay. And so this is one of the things that you're trying to find a deal on, right? Hey, you know what? One store had it for $10, another for $8, and another for $6. But you know what? I think I'll pick it up for the $6. It's the same thing, right? It's in essence, it's a fungible asset, right? Fungible meaning one thing from the other is basically the same. Okay. Now, when it comes to an asset, right? I should say a fungible consumable. An asset is not fungible if you want to think about it that way, right? My house and Joe's house are not the same house, right? But where I live, the value of the property is going to be very different from where Joe lives. And Joe lives on like 10,000 acres. Joe showed me a view of his backyard. It's gorgeous. Oh my gosh. I could only wish for a view like that here in the Dallas area. It's unbelievably beautiful up there, but cold AF. Now, there's going to be a huge difference between the price of these two assets, right? But let's think about this. If I live in the Dallas area and all of my neighbors move and nobody's selling their houses, so they have to lower the price more and more and more, does that make my asset more valuable? That's breadth right there, by the way. Does that make my asset more valuable or less valuable? Less valuable, of course.
Right.
And there are reasons as to why assets go down in value. And you don't want to be buying them as they go down. You want to be buying them as the asset price is going up in value, because then you're making money. With a consumable, I have no intention of selling this for a profit in the future, Joe. I just don't. But an asset is exactly that. Buying it with the intention of selling it at some point in the future for hopefully more than what you bought it for. This is a fact, right? You have to treat assets and consumables very differently. But most people want to treat assets as if they are consumables and try and buy the dip, bro. Yeah, unfortunately, it doesn't work like that.
Yep.
Takes some burning of us getting our hands on the stove hundreds of times before we learn. I'm trying to help you out here. I'm trying to help you out. You guys can learn from my mistakes, right? I'm giving you the best thing I possibly can. I will give you, Joe, literally, it is in my best interest. It is in your best interest to give away everything I possibly can. Because the more successful you become, the more likely you are to become an outlier. So yes, I want you to be as successful as possible. and then you become an outlier. How's that sound? My evil
It's
plan.
magic.
Make you successful and profitable.
The dip, because maybe you were just not expecting something to happen that is very normal, very regular, and a high frequency occurrence for the last 50 years or so. And if you had expected the possibility of something like this happening right now, you might have been a little bit more prepared, but even if you weren't,
I expected it. Joe, did you expect any time for the market to ever go down?
Yeah, I've actually planned for the market to go down. I am prepared for the market to go down, and I know I'm going to make money on the way back up.
Huh. And you know what, Joe? You're absolutely right. You are going to make money on the way back up. I can't guarantee it, but I'm pretty confident in it because we have profitable plans that work when the market's trending up. And we have a profitable plan that works when the market's trending down. Ozzy Ian has given us way too much credit. Ozzy Ian could potentially win the U.S. Investing Championship, by the way.
I think he's going.
It's very possible. You could be looking right there at the face of the U.S. Investing Championship winner. It's highly possible.
And how cool is it that he was a student in the same exact class I was in, and he has just taken that knowledge, dropped emotion off the table, and he is winning, extremely winning.
Yeah. I mean, legitimately, you can see Ozzy Ian when his internet worked. I'll point out when my internet worked. Apparently, it's not going to work right now. When his internet worked, coming through in the alpha class on the Outlier University alpha class. So be sure you go watch that. Let's finish this up, Joe.
Wouldn't be feeling the same fear you might be feeling right now. So just recognize that fear, that panic, that inability to fall asleep at night, that pit that might be forming in your stomach, that thinking, why didn't I sell? The natural response from having a missed.
Oh man, I'm so grateful I've moved on from all this, but maybe Joe Brown's sitting in that same feeling right now. And that's why it's top of mind for him, right? Maybe, I don't know. I'm not going to judge. You do you, bro. Having that feeling in your pit of the pit of your stomach, like, oh man, why didn't I sell? You should not have that anymore. Like, you legitimately at this stage in your career, if you're watching enough Outlier, which if you're not, you need to subscribe. At this point, you should not be ever having that feeling. Now, there are times where it's like, oh man, I feel dumb for having sold, but you should never have that regret feeling of, I can't believe I didn't sell anymore. In fact, I have a slide for this. I got all the slides, Joe. Don't worry. Hang on. Not that one. Not that one. Where he's talking about feeling stupid. Wait for it. This one. Here's the cold, unforgiving truth. You can take small drawdowns, feel stupid. Oh, by the way, this is Mark Minervini, one of the greatest traders of all time and personal friend of mine. Here's the and two-time U.S. investing champion. Here's the cold, unforgiving truth. You can take small drawdowns, feel stupid, and still walk away with your capital and your future intact. You're not doing that if you're listening to these people who tell you to dollar cost average on the way down. Okay? Or you can hold hope, and on the rare occasion, you might even blow up. If you're not feeling like an idiot often, you're not managing risk. And here's the thing. There will be plenty of times where a stock goes down, you get out, and it goes back up. It's a fact. It is a fact. Be okay with that. But I'm not going to lose any ounce of sleep at night because I'm regretting not following my plan. Absolutely not.
Expectation, but the data shows that what's going on right now is completely normal, regardless of whatever the catalyst is. There's always a world-ending catalyst.